Yeah. Hey guys, welcome back to TradFi and Bitcoin Club. And today, Bala will take us through Bitcoin retirement calculator, which is based on power law. So he made this, and I found it very interesting. And I think you guys have already had one first intro session, and today most probably we will continue the part two. But yeah, Bala will take us through some basics of power law as well. So don't worry if you don't know or uh, don't know about power law and all. So yeah, Bala, you can take over the stage and the stage is yours.
Yeah, thank you. I'm Dab. Just a minute. I'll share my screen so that. Just- okay. Is my screen visible?
Yes.
Just a minute. I think. Okay. So I think most of you would have seen this um, uh, V1 of this calculator. So basically, it's a BTC retirement calculator that we are trying to uh, code it's a basic tool that lets you to find or get a ballpark figure as to how much BTC you will probably need to retire. It just assumes the model is the future price of Bitcoin is based on BTC's power law. I'll briefly explain you what a power law is and what sort of price assumptions that we are using for this model. And I'll show a basic walkthrough around how this thing works. I think most of you would have seen what the power law is. I'll try to keep it short. If you have any specific questions, feel free to, because most of the attend participants here know about the power law. So a basic explanation is that um, um, we are trying to if you look at Bitcoin's price in log scale, you you can find that there is a certain orderliness or pattern that price action has, and it can be modeled using something called as the power law. Power law is nothing but a simple equation that helps you calculate y based upon x. It has a simple formula which has just an exponent to the x's value multiplied by some constant. So if you put in Bitcoin's price and then try to model it using power law, what you will get is this blue line, that the light blue line that goes through or cuts through the price of Bitcoin itself. What this blue colored line tells you is that there is the price action basically follows this power law, and because of this power because it is reasonably or very well explained by this power curve, we can use this to look into or get an idea of how the price will keep evolving in the future. This basically power laws are observed in multiple phenomena in nature. For example, how a city grows, how viruses spread or develop. So there are many physical and biological, physical, and human phenomena that can be explained using or whose trend follows a power law. So uh, the assumption is like the idea behind is that Bitcoin is a network, and it behaves like a network. As more people plug into the network, it keeps growing. This is not power curves are not exponents. Exponents are different from power curves. um, Most of your financial assets behave exponentially, and but they don't behave in a power curve. What is the difference between exponent and power curve? Power curves are very steady, or very orderly in nature. They keep moving along at some rate, and it's also sustainable. But when it comes to exponents, they go up very quickly. Whatever might be the y-axis that you are looking at, it might be price or something else. So the exponents move up very quickly, and then they
Bala,
also tend to.
can
Yeah.
we zoom in a little bit?
Yeah, 1 minute. Uh, okay, so
Maybe you can zoom in the page itself.
yeah, yeah.
Yeah.
Yeah. So that is some basics about power law. And Bitcoin has so far in its 16 years of price history have moved along the power curve, and it has sort of moved. Although it experiences some extremes, it has maintained this movement above and below the power trend itself. So this is what we are trying to use for our calculator. So now that we have the power trend, we can calculate percentile lines, like the 2.5th percentile line, which is the last line that you see here, the dark red one. What this line signifies is that 97.5, like the actual price of BTC has been above this line for 97.5 percent of all observations. So since its genesis, this price has been above 97.5% of the time, above this line. So this is the 2.5th percentile line, and similarly you can plot other lines. So the light red one here is the 16.5th percentile line, which also means for 83.5% of observations have been above this line. And this light blue line is itself the power law trend line. And above it, you have the 16.5 sorry 83.5 fifth percentile line, and the final one is the 97 point fifth percentile line. So what does this light green line 97.5 percentile line tell you is that uh, only 2.5 percent of whole price action of Bitcoin has been above this line. So Bitcoin's price action rarely breaches this line, and if at all it breaches, it always tends to revert back into or towards the power trend. So that's the significance of these lines. And for our calculator, what we have done is that uh, we have used this bottommost line, which is the 2.5th percentile line, as an assumption, like the future price we assume that will be along this 2.5th percentile line. Based on this 2.5th percentile line, we will be calculating how much BTC that one would typically require given their current age, annual expenditure, and retirement year, like when you want to retire. Um, so that's the basics of power law, and this is the power law equation that you see here. It's just a constant multiplied by the days since genesis raised to some power. So this is the power part, power trend part. So and I have given a brief explanation of what these percentile lines are. You can check them out in the app. um, we have maintained or used this bottommost line in order to make very conservative estimates as to how much BTC you will need, and strongly believe that the Bitcoin's price action will likely go along the power trend, and if that is the case, then basing your retirement calculations based on this line will be a very conservative or solid bet, and you will be very well prepared for any type of variables that might append your retirement calculations. There are a bunch of variables that will likely influence your retirement calculations. So I'll briefly walk through how this thing works. I have changed the interface a bit when compared to the version 1 that we saw a month back or so. Now I just get the following inputs from the user. You have to like put in your current age, then your annual expenditure, let's say 12 lakh is your annual expenditure, and you want to retire in 10 years from now, let's say 2035. And now once you have entered it, you can click calculate. So it will give you a scenario based BTC requirement. So I have defined three scenarios for your consideration. One is optimistic, conservative, and extreme, and these are the assumptions that go into these scenarios. In the optimistic case, I assume that the inflation rate from now on will be 6% constant, and till you are 90 years of age. And I have also assumed an USD INR depreciation rate of 5% for the optimistic scenario. And in this scenario, you will probably need zero point 0.2, somewhere around 0.22 BTC for your retirement, like that is from 2035 till you age 90. You can live off with 0.22 BTC for the rest of your life, provided you maintain this 12 lakh of add-on expenditure. Similarly, you have this conservative case. The assumption there is the assumption there is 8% inflation and 3% depreciation. You will need slightly more BTC if this is the case that you want to assume for and plan for. And the extreme case is 10% inflation throughout, like starting from now, and there's very low INR depreciation. In that case, that will be the extreme case, and you will probably require zero point 0.8, close to zero point 0.8 BTC in this scenario. So you can like choose based on your outlook, whether you are pessimistic, optimistic, or conservative. You can choose any of this and fix a target for yourself, and start accumulating these BTCs. And following that, some text that basically explains what I explained to you here. um, then this is a plot that shows you how you will keep like like let's say you have uh, accumulated this 0.4431 BTC, and now you are in the year 2035, and you are going to live off of your 0.44 BTC. This is how your stack will you will spend down your stack. I have plotted all three cases. If it's your conservative case, in the first year you'll be probably spending close to 0.09 BTC. Then the second year you'll be spending less than 0.08, and as you go on, the expenditure of BTC decreases. So this is all based upon the 2.5th percentile line of BTC. The assumption is that BTC's price appreciates following this 2.5th percentile line that you saw here. The price keeps going on here, but in all likelihood, BTC's price will hover somewhere above and below the actual trend line. So you are looking at a very conservative estimate and target. So this will be your this will be how you will be spending down your BTC. Then this is how your 12 lakh expenditure that you are incurring now will increase. So in the optimistic case where we assume 6% inflation, this is how your expenses will go, and probably when you are 90, your 12 lakh will likely be 2 crore 79 lakhs, around that ballpark figure. If you assume say 8% inflation, you are likely be your 12 lakh expenditure now will likely be 7 crore 65 lakhs, and in the extreme case it will be somewhere around 20 crores. So this is how your expenditure will likely go on. And so this is for the I have boiled down three scenarios for the basic user who is not very curious about all extreme cases. For the curious user, I have provided a heat map kind of thing. So these are three cases that we saw earlier. Here on the x-axis, I have plotted the inflation rate, and on the y-axis I have USD INR depreciation. So that's on the y-axis, and this is the BTC required. So you can for an advanced user who likes to game out multiple scenarios, who is interested in looking at looking not just these three scenarios, he can pick and choose his parameters, and then figure out how much BTC they require. Briefly describing these areas, we'll have to correlate how the economy will be like in different combinations of these cases. If we have a very stable like if the fiat system doesn't get off the rails, somehow people keep managing it and keep it running, and we are like the TradFi people, you believe so much in India's growth story for the next for the next 90 years. You can look at this area. So somewhere between 4 to 6% and 2 to 3% inflation rate, sorry, USD INR depreciation rate, and 4 to 6% inflation rate. So if you are very optimistic and you think the India's growth story will hold for the next 90 years, and people and the fiat doesn't get off the rails in the next 90 or so years, you can look into this region, and then uh, uh, take out the sats required. Probably you are looking at 0.276 BTCs. But if you don't if you are not comfortable with this area, then you can explore other areas. Like this is the these areas are the very areas require the largest BTCs. These conditions require the largest BTCs. So basically you are staring at a very high inflation rate and very low USD INR depreciation rate. So this can only happen when there is very extreme price shocks, and there is very severe capital controls, and the government is highly manipulating the they are pegging the INR to the dollar at by through some means. Only then this can happen, but it can happen very briefly, but sustaining it for a long period, I don't think it's feasible or anything. But if you are very paranoid and you want to be absolutely sure that the PTC that you are going to save for retirement will sort of help you get through any kind of situation, you can use numbers from here. Probably you're looking at quite high numbers, like one more than one BTCs in this area. And um, these um, these areas, low inflation and very high USD INR depreciation. That means like the growth story is somewhat unraveling, and people are dumping INR, and that's what this area signifies. It's also very unlikely, like you if you look at these numbers of the BTC that you require here, you will probably require less than zero point 0.1 BTCs in this sort of conditions. So this is also very unlikely, and similarly this area is also very unlikely, and you can like use some figures in this ballpark area to plan it. Historically, here I have provided a plot for currency. Historically, the data that we have right from 1970 till here, this is the USD INR rate. So we are like cruising along a 4 to 5% depreciation growth rate, compound annual growth rate, and this is likely to continue. If we likely keep up the 5% depreciation rate, so you can see the green curve will be shooting close to 200 300 INR per USD. If somehow the current account deficits, balance of payment, trade, all other things improve, we are likely looking at this yellow line. This red line, very unlikely. This can happen only if like we grow or we leapfrog um, like China or something. Uh, very unlikely. So we are likely to follow this yellow or green path or somewhere in between, because and it's not going to be a straight line, as you can see here. These non-linear, these step functions are because RBI's intervention. So they try for some time to intervene, or maybe a year or two or a couple of years. They try to maintain it, but eventually the market will push through any sort of barriers that the RBI tries to put in. There can be like a couple of years where they have like efficiently managed it and try to bring it down, but those are all short-lived, as we can see from the 50 years of data that we have. So eventually their line always moves up into the right. So so that's something that you will have to look into if you are trying to use this advanced heat map to figure out how much you need. So I have given a description of whatever I described here. So you can like decide your target based on these areas. Then I have a tab for accumulation strategy.
Hey Bala, okay if I can ask a
Yeah, yeah,
question here?
yeah, yeah. Go ahead, go ahead.
So you mentioned a couple of examples of if there's high inflation and like low depreciation of INR compared to USD, and then the reverse example of low inflation and high debasement of INR and USD. Is there a inverse correlation between those two, or are those two independent of each other? I'm just curious because
Uh,
you gave those examples.
Yeah,
Yeah.
they are all dependent. You will have because of our economy's structure, you will have high inflation because of multiple factors, primarily factors driven by oil price. Then the second major contributing factor is some serious problem in the food supply here. So you have back-to-back monsoons, or there is some drought, something extreme happening in the food supply. These are the two primary factors that can really actually push the inflation's needle. Um, that also goes along, that also affects or in turn feeds back into your USD INR depreciation rate. So typically, when you are when your economy is highly inflating, that means for a sustained period of time, if it's inflating very high, your inflation is sustained for very long number of years. That means foreign inflows will sort of stop, and they'll start to pull back money from the economy. So that will put pressure on the USD INR depreciation, or sorry, appreciation rate. So most likely, if you are experiencing very high inflation, you will also experience very high appreciation rate. Very low appreciation rates are possible only if there is active currency management by the Reserve Bank. So let's say 10% inflation and 2% depreciation, very unlikely, because 10% inflation will also push up the appreciation rate close to or above 6 or 7. That's what I think, and also likely data also points to. You can the only way to pull this down is through active intervention by RBI, and most likely it will not sustain, as we have seen here. It will eventually give up. They can manage it for some time, but it will give up after some time.
Right. So the most likely scenario is high inflation and high uh, depreciation of INR to USD, right?
Yeah, if you are looking at high inflation, then the depreciation will also be high, and in that case, you will likely require less BTC. So BTC will protect you uh, mm, better. So if you can see, like here, you will require like close to zero point 0.8 BTC, which is high inflation and low depreciation, means low appreciation rate. But realistically, the appreciation will also increase if you are facing sustained high inflation, and in that case, you will only require close to zero point 0.3 BTCs.
Got it. Thanks. And just one basic question. So you mentioned that this depreciation will happen because people will be dumping INR, right? And by that you mean institutions dumping it, right?
Um, the demand for the currency will not be there, because high inflation means you will not have a good current account. Your current account deficit will be high, means you will be importing more than you will be exporting, and only if you export more will there be demand for your currency outside your borders.
Right. But realistically, it will result in more capital controls, right? Not necessarily dumping of INR against USD.
Yeah, yeah. Government will intervene heavily, and they'll try to force the
Right.
appreciation rate down.
Right. Right. Makes sense. Thanks.
Um, so that's about this tab. You can also go into this accumulation strategy tab. It will sort of get you um, how much BTC you have. So right now we have a target of zero point 0.4. Let's say I don't have any BTC now, and I'm looking to accumulate this BTC for my retirement. This also uses a few assumptions. The idea is that to be extremely conservative for this calculator. So that's why for spending, I have assumed the 2.5th percentile. I have assumed that from now on, BTC's price will strictly follow this bright red line. So you will buy, like you will have to accumulate BTCs based on the expectation that you will need, like the BTC's price will follow this 2.5 percentile line. Um, for accumulation, I have assumed that the BTC's price will follow either the I have defined three cases based on the assumption that the BTC's price will follow either the power law trend line itself, the light blue straight line, or the 86.5th percentile line, which is the dark green, and the 97.5th percentile line, which is light green. So the idea here is that you will be very you will assume that the BTC's price will be low enough, and that based on that assumption, the BTC that you require will be slightly higher than the BTC that you will be actually needing. And for accumulation purposes, if you are taking these two green lines, that means you will assume that the BTC price will be quite high, and you will be shelling out more money upfront, so that you will quickly reach your point for BTC's target. So that's the assumption here. So for the optimistic case, I have assumed that the price will follow the power law trend line. For the conservative case, 83.5 percentile line, and the extreme case, 97.5 percentile line. So basically, if you don't have any stack for your retirement and you want to plan, you can use these three scenarios. And here I have provided a waterfall plot. So this point 4 BTC, if you are like doing it lump sum, you can like just spend 43 lakhs and buy this. Then you are well set for your retirement. But if you don't have this lump sum and you plan to do some kind of an SIP, and you want to use the optimistic case, then this is the kind of monthly SIPs that you are looking at. 2 lakh 50,000, close to 2 lakh 50,000 is the monthly SIP that you are looking at. What this plot tells you is that it will likely cost you a lot more, like plus some 2 crore more than like if you buy now, right now. By the time you end up accumulating by the time you end up accumulating the BTC required slowly monthly, doing some SIP, you will likely end up paying more, 2 crore. But even this crore target is very like cheap when you compare it with TradFi models. So if you put these numbers in a TradFi model, like currently your age is 35, and you are yeah, and your annual expense is 12 lakh, and you want to retire in just 10 years time, it will throw you some crazy numbers around 8 crore, 10 crore kind of thing. So that's the kind of number that you will be looking at. Um, when you just use TradFi assets for your retirement. And this is the conservative case, and this is extreme case. As you see, extreme case, like you'll have to shell out more money. So the best plan is to buy now. um, so that's about this plot. Other things I have given some detailed SIPs that you will be doing at you are looking at for the first 12 months in the conservative case. So your monthly SIPs will start from 62,000, and it'll keep on increasing because the price will also keep rising, and you'll have to keep up with the price. And by the time you are planning to retire, which is to 2035, the last monthly SIP, you are probably looking at 12 lakh 10,000. So the first portion of your BTC you will be buying at 62,000, and the last piece of your BTC that you want to retire with you will be buying at 12 lakh. So um, that's the kind of numbers that you are looking at. So yeah.
And this is accounting for the inflation year on year, right? The fiat depreciation.
Yeah. It assumes so like this number 0.43091 comes from your calculator here. So 0.431 is what 0.4431 is what you have calculated for your conservative case. So you are assuming 8% inflation and 3% USD depreciation.
Right. Yep. And this is 8% averaged out because this could vary from like 14% one year, 2% next year. Like, and this will be reported inflation, right? Because I mean, CPI itself is a very contentious metric. Yeah, just curious.
Yeah,
Like,
yeah.
yeah,
No, this is a number that that the model gives you. You can like if you feel the reported CPA numbers are cooked down, you can pick a number
right,
based on your own assumptions. Let's say now
right,
it's 1% inflation. We are looking at 1% inflation, and you actually think the inflation is 6%. Then you can use this number. But yeah, it assumes like from now on, from 2025 September 2025, the inflation will be a constant 6%, so
got
or
it,
7%
got
or
it,
8% or whatever.
got it.
Yeah.
Do you think in
Um,
future you might want to add a feature where every year the rate of inflation is also increasing? Like every year, we're seeing that inflation numbers are higher, right? So just in inputting a variable where, like the first year it's 8%, next year it's 8.5, after that it's 9.
uh,
Would
that
would that make sense?
it doesn't because you cannot get a meaningful number. Like the number that you want is should be something concrete, and because of BTC's price action itself, it is always best to get go about and acquire this BTC as quickly as possible. So waiting for another year and another year is only going to cost you more.
Also, you can today itself assume that inflation will be around 12%. So instead of assuming 8, 8.5, 9, 10,
Yeah.
assume today that it will be 12%. So it will average out.
So
Right.
if you assume like today, you are going to face 12% from today onwards, and you can like try to pick a number along this vertical based on your assumption of USD INR depreciation. If you want to be like very aggressive, then I would say pick 12 and 2%, and you are looking at 1.3 BTC for requirement. And if you set this as a target and go about acquiring it as quickly as possible, then you're set.
Right. But my question, Bala, is that every year it will increase and that will like make the case for acquiring BTC faster even stronger, right? So this year it will be 12%, next year it will be 12.5 because I think currently it is averaging it out, right? 8% year on year average. Like that's the assumption with the inflation
Uh,
rate.
no, the CPI data right now we are looking at 1%. Like the recent CPI data is 1%. I'll if you want to, we can visit the statistics website and have a look at it. So yeah, it is not some it is the inflation the rate of inflation is not something that keeps on increasing every year. It will they will give you a number like see here the consumer price index inflation rate for July 2025 is 1.5%. So if you want to
Right.
look at a plot here, they'll give you this kind of plot. So the inflation rate has like gone up, and then it has started to come down, and it will go up. But the price index itself is something that moves up into the right. So if you see this current series. Let's say if you want to like look into January 25, and if you want to look all India, and you are interested in food and beverages, if you look at it, oh, there should be a place to plot it. Yeah, okay. So this is your food and beverage. So you can see the plot here. I hope it's
Yes, yes.
so the index here, like from 2013 onwards, it keeps going up. What we mean by inflation rate is that the percentage of increase from, let's say, whatever you take it as a base, from let's say from the previous year to this year, is the rate that you see in the news. So this is the price index. So the price index is something that keeps on going up into the right.
Right.
So, so that means the food and beverages, whatever food and beverages you purchased at 2013, has gone up in price like this. That is different from the inflation percentage itself. So that is what you see here. So if you want to pick January and 25. So this is the inflation rate. So the percentage or the rate doesn't move always up into the right. Only the price index moves up into the right. And what we are considering here is the rate. So in our
Hmm.
calculator, we are considering the rate. So what that means, what does that mean? Like if we are assuming 8%, that means from 2014 onwards till 2025, there is a constant 8% increase in prices year on year. So
Right.
that means when you want to like visualize it, it's like this plot. This is the inflation rate plot. It will be a straight line in our assumption. So 8%
Right.
straight. Every year it will be a bar that is 8%. Okay.
Yes.
And
Yes.
when
Yes.
it comes to index, when it comes to price index, it will be like this. So it will be a constant line that goes up into the right. There will not be any bumps up and down, but a straight line that keeps going up into the right. So that's what means by 8% inflation rate year on year. So these up and downs are because of the up and downs that you see here in the inflation percentage.
Hmm.
I hope you are able to understand.
Yes. Yes. Thanks, Bala. This was
So
helpful.
yeah, this goes down. So you see a corresponding down as the rate goes down. You see a corresponding downward sloping portion in your price index.
Right. And this is mainly because of like central bank monetary policy, right? Because of adjustment of interest rates. Like the reason that these go down.
Yeah,
Like what's the reason that money supply is always increasing, right? So what's the reason that inflation rates are going down?
inflation is always a monetary phenomenon, although most of many Keynesians will try to tell you that it's supply and demand driven stuff. Uh, Friedman always says that inflation is always and everywhere a monetary phenomenon. So it's all due to the uh, um, due to the policies of Reserve Bank and the central bank, both fiscal and monetary policies.
Right. Yes. 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 Thanks, Bala.
So yeah, any other like actually we are I'm I'm old and I'm Dab. We have been trying to test this, and we want some of your inputs. If people want any, if you guys want any particular features, if you want any refinement and stuff like that, we are looking for feedbacks so that it will be more useful.
So,
So
Bala, can you? Okay,
yeah,
go ahead.
no, no, go ahead, Apollo.
No, I was just saying that can you make a power law chart with gold rather than USD? Because the
Uh,
power law works in nature because there is no manipulation. And fiat is basically a man-made thing. So that's why you can't rely on the power structure when it comes to man-made things because there is no uniformity to it. When it comes to nature, there is always uniformity. It goes by some law which the nature follows, but fiat doesn't follow that nature. And plus, if you make the power law in certain years, if you take Weimar Germany, or if you take 2000, if you take Zimbabwe, or if you take some other structure, if you take Revolutionary War of the US, or you take Rome, these power laws doesn't work. They actually fall pretty
yeah,
dramatically.
yeah. I agree.
But gold is also
So
manipulated. But if you take a 20 to 30% manipulation factor, then also the constant. If you bought a, if you had the same amount of gold at when you were in Rome or you were now, it will technically buy you the same amount of rice. People have done that calculation. So basically,
mhm.
gold is a much better useful factor when it comes to power law because you will know how much exactly Bitcoin approximately you will need, making 10 to 20% variation here and there.
Yeah, I agree. BTC priced in gold, yeah, the power law in that is much more tighter than USD. Yeah, but how does it like that is something separate. I am not able to understand how can we put that into this calculator so that we can
So,
improve it.
so you don't have to put USD price of gold. You have to put the gold ounces itself. So if you
Okay.
take the supply of gold, there are two types. So you can do with the gold price also, USD price of gold. That also
Hmm.
works, but if you take the actual supply of gold,
Hmm.
get my point? That will be much more accurate, I feel.
Yeah, okay. But then we have to maintain the denomination in gold. So how does it help us to uh, sort of
You will actually get
fix?
to know how much ounce of gold or equivalent of Bitcoin will you need. So you will get a Bitcoin equivalent number also. So if
Mm,
you assume something in gold, so this much ounce of gold you will need in 20 years, you can
okay.
extrapolate the price also in terms of so you can use the USD price and you can make a mixture of both. So you can use gold ounces plus USD price and take a mixture of it and make a power chart of it with Bitcoin as the base for your retirement calculation.
Right. Okay, I'll look into it. Yeah, to uh, equate how much gold and Bitcoin that you might require
And
given.
And if you want to add to make IMDA happy, you can always put, so you're putting lump sum amount for BTC, right? The lump sum amount you need right now. So
Yeah.
if treasury companies have a 1.5 NAV or 2 NAV, you can also tell people to buy the treasury companies. So you'll need half the amount of money, right? So you buy
No. That
lump sum treasuries.
no treasure, no treasuries in retirement because that will complicate things. Like you'll have to go into taxes and all those stuffs. So I just want to keep this very simple, and that will the whole idea is that to as Amol says. This amount of BTC will buy you a time capsule. So what we are trying to show is that if people can think along these lines, they can very well plan like uh, save their
No,
energy or work in
yeah, but
BTC
Bal,
so that they
yeah,
can
Bala, but
buy
they
their
are
future time.
saving half the money in fiat. You're not understanding. You should understand.
Yeah, that's what we're trying to show to people as to the quantum of BTC that you require now, like that if you manage to acquire now will sort of buy you a time capsule which you can use to sail through the rest of your years.
But okay, but joking aside, I'm serious. So let's say, so you will not ask people to buy genuinely the one point. So if you are getting 1.5 to 2 MNAV, or if a company is going to give you, technically, IMDAB is right. Why would a sane person put it in BTC if he's going to get the double the returns and half the money he's putting in right now? So
No,
why
no,
would you? So
that it's not just about return. We'll have to like then the conversation
Risk.
goes into risk adjusted returns
Yeah.
and all those stuffs. So then it doesn't make sense.
Power law won't fit into Bitcoin treasuries.
Yeah.
I mean, some people have tried fitting power law into treasuries, but um, I mean,
The
the predictability nature of power law then goes away. Like newer and newer data comes, and then
power
it's
law
difficult.
works. Yeah, power law works in BTC because it's a protocol and there is not
Yeah,
you can't mess around with the protocol.
and I get it. I just that because people like have conviction in Bitcoin, we are little insane. But sane people, if you look at this and they go for after they find out that okay, I have to put 25. Sorry, what do you bought? 40 lakhs, right? Zero. Yeah, 40 lakhs
Yeah.
right now lump sum. And if I
Hmm.
am going to get the double the returns in around 10 years, if the MNAV is going to be constant at 1.5 to 2, if the returns are going to be that, why would a sane person go into? So conviction set aside, I'm talking about normal sane people. What's their incentive to buy BTC rather than going by as AMDB does it? To AMDAP does it that you have to have
Yeah.
some risk
So
factor to
Apollo,
get a better return.
I would like to add one point here. Like you said that MNAV is 1.5, so you'll be getting 1.5 the BTC. It is not like that. Suppose
yeah.
it is 1 BTC for 1 BTC for the required amount of BTC, you are spending 43 lakhs. So if the MNAV of a share is 1.5, then you have to spend 43 into 1.5, like 65 lakhs to get the same amount of BTC.
Got it. I got it. But in the future, the returns will be always the same, right? So the MNAV will always be
No, no, it is
1.5.
not. It is not guaranteed. No, it is not guaranteed. It is a share which they are issuing. They are issuing a security. If something changes in between, like any legal structure or anything changes, then the share will not be the priced at same multiple.
Yeah, but against that, then if you compare it to BTC, BTC is more volatile. So there is a more downward
It is
trend when
more.
it
It
comes.
is more volatile, but it is a bearer asset. The person who has the BTC has is the owner of the BTC, but the person who is the owner of the share may or may
Yeah,
not be the owner of BTC, underlying BTC in the future.
yeah. But I will get more fiat now. Forget BTC. I don't care about BTC. I want fiat returns. So if I'm going to get
No,
that,
but
so right now I'm paying 65%, let's say, for the that 5.5% more for the BTC held by the company. But the share appreciation will be always be 1.5 to 2 MNAV when it goes when
no,
I go forward, right?
that you're that
That's what I'm saying.
yeah, that you're assuming that it will be always be
So
1.5.
and I'm
It will
assuming
it
for
may not
BTC
be
also.
1.1.
So that assumption applies to
That
BTC also.
No, for
yeah. So that
BTC
Bala.
we are using the power law, but the whole idea here is that we are assuming the price of BTC to follow the 2.5 percentile line. Like it's very conservative assumption that we are
Yeah, so
trying to
that's what I'm saying. So
build
if
here.
the treasury companies also have the BTC and it follows that line, and the
No,
treasury
no.
companies are telling me that the share price will be above, so it will be 1.5 of the right now I'll pay more, but as the time goes on, my BTC equivalent of the share will be valuable more than the BTC itself because
No,
that's what
the
they promise
problem
us,
is
right?
that's what they promise, but the thing is that you have to factor in because they are fiat instruments. You will have to factor in risks, so that will bring in all sort of equations into play. You'll have to calculate the Sharpe ratio, you'll have to do a lot of risk-weighted estimations. So
Got it, but why are you differentiating a risk between BTC and the treasury company stock? That's what my main problem is. If
stock,
you're
stock is a stock. It's, as Amol said, it's
Yeah,
issued
no,
by
but we live in a fiat world, right?
um,
this
and
conversation won't end.
yeah, yeah.
Maybe I can try. Apollo, have you seen? I mean, how has the NAV multiple? I guess you have seen it change over the months, right? It has been 3, 7, now it's down to 1.5. So it hasn't stayed constant. So working with an assumption that NAV will stay constant, MNAV will stay constant, I don't think is even true to in the little history we have seen so far. The other is power laws usually are used to explain long-term trends. With BTC, we have 16 years of history now. With treasury company, you have 5 years of history of one company, 4 years, right? MSTR, you have 4 years of history, maybe five. All the others, you have even much lesser, right? So you won't be able to, even if you arrive at some numbers, I don't know how meaningful they're going to be.
Yeah, true. But again, I will add the same thing. So if you have bought Bitcoin in 2015, you would have been much richer than what you have right now if you buy right now. So it's the same applies too. So these treasury companies are so nice. So you are getting a chance to get in really early. That is a plus point of treasury companies. So if you get in, and if you know that fiat, so the assumption is that fiat has been there for around 150. What technically fiat is there for 171, so 50 years. And again, if you take the history of the central banks, it is one for 120 or 30 years. So that is a much more compelling reason for normal people. If I'm going to get more returns for BTC from treasuries, why the hell should I buy BTC? And plus, I'm getting
Right.
really early.
See, that is a different question altogether. What we are now trying to see is use of power law to predict prices of BTC and see how much you would need for retirement, right? Why will I invest in BTC? Why will I invest in
Yeah,
different
but
story
again, I
altogether?
even if I use his calculator, Bala's calculator, I have to pay 30% to use that BTC, right? So if
Yeah, right
that's the
now the
case,
right now the capital gains is 30%.
so we don't know what will happen in the future. As Amol said, the situation can change. They can take it from 30 to 50% also. You don't know.
Yeah, that risk is there. Yeah, we agree. Yeah.
So exactly. So why this risk for treasury companies you're taking as a highly, yeah, it's very risky, but Bitcoin, no, no, no. It
Because the
with my
assumption you're talking about is already being violated. That you can already see MNAVs varying to a large degree ever since in the little history we've had. Taxes, if it changes to 60% or whatever, right, 50%, you can actually, it's a linear change. You can actually make an adjustment in this model that he has built and arrive at a new number. Also, it might not change, right? We'll work with what we have. Taxes don't change.
Yeah, so okay, let's say, can I ask you? So let's say you keep it at 30%, no changes at all, and treasury companies plus, if I buy it right now, I'm doing a premium of 5%, 0.5% extra I'm paying for the same BTC compared to share price. But again, the same will apply to my shares in 10 years time. So again, I'll getting be zero point 0.5 per return per year, 0.5 or 1% if it goes to 2% or 3%.
But
That I'll
that's
get
like
plus I will get a tax break also for the long term capital gains if it comes to that.